session. I'm pleased that we have enough attendees to present ourselves. So I'm Femi Muftaou. I am the Managing Director of IQQ. So before moving to the subject, which is one vehicle, one commitment, I am quite grateful and pleased to welcome our panelists. And I will give them a few minutes to introduce themselves. Maybe Laurence, you can start.
Good afternoon, Laurence Laplane. I'm head of impact investing. Maybe it's better without the mask at Amundi.
Gwenaëlle.
Gwenaëlle Godaguzan. I'm heading the French office of Ambienta. Ambienta is one of the leading investors in environmental sustainability in Europe, and we invest in mid-cap companies.
Thank you, Gwenaëlle. Hassan?
Hi, everyone. Hassan Sarkozy. Is it working?
It is.
Hassan Sarkozy, I work for Visualize, part of Moody's ESG solutions on methodology for impact and sustainable finance.
Thank you, François.
Yes, hello everybody. My name is François Tranier. I am a partner at Meanings Capital Partners, which is a private equity firm based in Paris, which is managing funds for private equity and real estate. We're managing about 750 million euros.
Thank you very much, François. So we're going to start the discussion on the subject of this panel. Well, I must confess you one thing. When we first read the subject ourselves, we just asked, what is this question? One vehicle, what type of vehicles, and one commitment. Is it a commitment of our LPs or the company's firm commitments? So we decided to first discuss of this question, and maybe I'm asking the panelists, and maybe Hassan, how do you understand this question, one vehicle or one commitment? How do you read it?
Well, I think both notions are interlinked. And when we talk about commitment, from my perspective as an analyst on ESG and sustainable finance, and when I look at commitments that companies are making, I have to say that the focus right now is on net zero commitments, right? That's where the focus is, and that's where I think either companies, either LPs or GPs are focused on. So, and also I think it's important that related to, what is this question, impact ESG as well are two broad terms. And I think it's important that, first of all, we clarify a bit what is the one and what is the other. So when we talk about impact, normally we look at companies that through their products or services are solving a critical environmental or social issue. And from the investor perspective is really what is investors' impact while investing on those companies, and whether it's aligned with its own investor objectives, right? And on ESG, when we talk about ESG, which could be slightly different, but I think it all falls under the ESG term overall. But when we talk about ESG, we mainly refer to ESG measurement, right? And how companies are managing their exposure to ESG risks and also opportunities. And I think it's important that we talk about opportunities as well. And commitments are related to opportunities normally. That's how I understand it. And
Thank you. Net zero commitment. I can hear when you're speaking the measurement specialist working at Moody's. Thank you very much. It was quite well detailed on your answer. What about you, François? How do you read this strange question?
We have the following vision, is that we think you can have a general commitment from the GPs, having a philosophy purely ESG or impact. Or maybe if you are a bigger player and you are a big asset manager, you can split your vehicles and have some vehicles purely dedicated to ESG and impact and being state of the art of the regulation. As you probably know, regulation is evolving. It's changing quite quickly. The change have really a big impact, of course, on environment, social and governance, but also on organizations. And the players have to follow the rhythm. When you are a small player, maybe you don't have the same resources as a big player, and maybe you have to make choices. Either you decide to be really a very specific and a specialist, to be really all the time state of the art on this topic, and then it's part of your strategy to have one or two vehicles dedicated purely, and you don't do anything else. Or you want to remain a more generalist, and then you take just a general approach. So it depends on probably your size. Are you an asset manager or a more specific, smaller firm? And it depends if you really want to be really state of the art and having a specific vehicle dedicated, so that investors they know really where they put their money, what kind of vehicle they put their money.
So if I got it correctly, basically the question is, are you taking ESG as an opportunity to create a vehicle, or are you making it a company statement? But about this, my question, I have another question, and maybe Gwenaëlle, you can take this one. What is the private equity industry is doing? How are they making their choice? Do we have some players who are going for dedicated vehicles, or others are saying, listen, I will do that as a basic for all my vehicles? What do you see?
I think there is not one single answer. ESG is a revolution. It impacts every company, every corporate, every listed company, every private equity fund. Everyone is concerned by ESG. ESG is not ticking the box. ESG has to answer a question is, how do we build sustainable finance? How do we meet our own needs without compromising the needs of the future generation? How do we turn action or theory into action? And the amount of stakes are just amazing, because you have at the moment 100 trillion economy transitioning from non-sustainable business to sustainable business. So the amount of stakes are just amazing. The question is there any single strategy to deal with that? The answer is no, of course not. Either you decide to raise specific funds that are just focused on ESG or impact, and we will come back to it. Or you decide to remain a generalist fund with a clear commitment, a clear roadmap across the firm, and you need to develop all the ESG roadmap on your portfolio companies and at the management company. The question is, are you convinced? And whatever the answer, I think I work in a sustainable fund, so I'm convinced that the more specific you are, the more impactful you are. But I'm also convinced that you can be a generalist fund, sharing a lot of ESG commitments, and it is also valuable and you can have an impact. Provided everyone in the firm, all the investment team, share the ESG values. And I think this is what is important.
Okay, I understand that very well. And just one question is coming to my mind, because we are all talking about ESG, but is the response to this question, vehicle, commitment, is the response the same if as it was impact finance? Is it the same? And are we going to address those questions the same manner if we were talking about impact instead of ESG? Laurence, maybe you can give us your lights on this?
Yes, but maybe I will come back on the first question, because Amundi is a huge asset manager with 1,800 million under management, and we have decided to have the ESG mainstream in almost all our portfolios. So the answer is not exactly the same as my colleagues here.
One commitment.
Yes, it's one commitment for any vehicles. In fact, for the time being, half of the assets under management are ESG proof, but the analysis now incorporate both financial analysis and ESG analysis. You can't split, you can't separate ESG analysis from financial analysis. And the good thing with ESG is probably that it has put back the company into its environment. So that's ESG, and it's becoming mainstream, whatever the underlying listed or not listed, or unlisted private equity or listed. Regarding impact, it's another story, because impact, instead of analyzing the company's behavior, impact, we look of projecting the company beyond its wall. Looking at the company's intention to contribute to the society, to the common good, I would say, whatever social or environment. And it's a specific process. It's not mainstream, so it's a special expertise. And at Amundi, we have dedicated funds to impact. It means that there is something else, is because the performance combines financial performance and also impact measurement. So intention means action. If you do impact, then you have to measure and you track the impact that you generate. And the performance, the return of the portfolio is definitely a combination of impact and financial.
Thank you, Laurence. You have to measure and track the performance. That's what I will retain when we're talking about impact finance.
I would have something, because I think we cannot speak about impact investing if we do not speak about measurement of the impact. You cannot be an impact fund without measuring the impact. At Ambienta, for example, we have a whole team. They are all experts in environment. They all are in charge of the measurement of the pollutant avoided or the resource efficiency, whatever the topic. But I think it's very important to have experts. For environment, for example, it's not black and white. Environment is considered global issues. It's never black and white issues. And you need experts, you need skills. And it's very important to have experts in environment or in ESG on one side and to have investors on the other side. It's very difficult to accumulate both skills at the same time. And I'm convinced that any impact investing without measurements is not really impact investing.
I was planning to come back on this, but it's interesting what you are raising, and I see that you know your topic. Hassan, how do you read that? Yes.
I just wanted to add that indeed measuring environmental impact is pretty complicated, and I just wanted to add that social impact is even more complicated, because it depends on which country, which region. Every country, every region, every culture has its own limitations into how you address it, and you have to take that into account. The local content is important. Of course, the focus right now, I would say, from both investors and companies, again, is on the environmental side and meeting the Paris objectives and the net zero. However, at the same time, we should not forget that the transition has to be just, and we shouldn't leave anyone behind. So from my perspective as an analyst, when I'm trying to analyze companies' performance on environmental aspects, I always keep in mind also what could be the impact in terms of their the communities that they work on, or their employees, and what are the jobs created and the jobs lost. So I just wanted to complement that to Grenel's point.
Okay, thank you, Hassan. But I'm sorry to jump onto that, but my question is, coming back to the topic that we have received, do you measure the commitment on the same way you measure the ESG of impact of one specific vehicle? Do you use the same metrics? And can you share with us some example of the metric you are using? We know some of them, I'm sure, but yeah.
So overall, the approach that we follow is the same one across anything that we analyze. It's a three-pillar approach. With the first thing that we look is either it's on the environmental or the social issues, is what is the commitment, right? That's the first thing. But And then what is the policy and how does that commitment translate into a target, and whether that target is quantified, what is the timeline for achieving that target. And that is the very first part. And then at the second stage, we would look at what are the means that are put in place to reach that target, to serve that commitment. And here, for us, it's really important the scope and the coverage, right? We can see cases where we have companies or even investors, when we analyze them, asset managers, saying we are committed to reaching net zero, for example, but then when we look at the coverage, it is only for a part of their activities. So that is taken into consideration. And the third pillar, and the final one, is really a historical analysis on real KPIs, right? So examples, I think Ganel mentioned some on energy efficiency, resource efficiency, carbon footprint, avoided emissions, and so on. So we look at all those. Depending the sector, some are more material than others. And we look really what is the trend, right, over the last 3 to 5 years, and whether it's continuously improving or not, and that is taken also into consideration. Then at the end, the aggregation of all the scores, all of those scores that we have per company, right, the leadership, the measurement, and the results part are aggregated at the fund or the portfolio level, so it gives the view to the investor or where is performing well and where perhaps needs to engage with the companies that has in its portfolio, whether it's on the commitment or is it on the measures.
Okay, that is interesting to have a bit insider view on how it is measured. Do you track, just by any chance, do you track performance versus ESG impact measurements, KPIs?
Yeah, we do that. And to give an example, if you, one of the services that we offer is also second-party opinions, right? And when we analyze projects, we have one part that is on the project. And on there we say, this project is really going to contribute to an environmental objective or a social one. And we have a section where we say, these are the expected impacts, right? And we try to explain a bit the delta of how this project is really having an impact, you know. And then there is the issuer part, where we analyze the whole company that is involved in the development of the project or the SPV.
Okay, thank you. That's interesting for me. I have one question, because we're talking about ESG, we're talking about finance, or impact finance. What does it mean in terms of investment strategies? And I'm going to ask this question to François and Gwenaël, because, well, does it make sense to speak about investment strategies if it's a commitment? What will be your views on that?
If you want to start, go ahead.
François?
Go ahead.
Yes, as for us, so we have a general commitment approach on the subject. We have 3 funds, 1 in real estate and 2 in private equity. And we think, so we jumped onto a general approach because we are, compared to other players, small companies, and we wanted to be sure that the subject would be correctly tackled. And we decided to involve the front office teams on this subject to be sure that the companies we invested in would make actions and concrete actions. So it's the way we see the point. To give you examples, we make systematic due diligence, ESG at entry. We put incentive on managers to be sure that we align interests, and we are today implementing incentive also at the stage of us, the GPs, so that we have a pure alignment from the regulators to the companies. And we spent a lot of times with the managers of the companies because as for us, we are on a segment of companies which achieve sales between, let's say, 10 million to 100 million euros. And so sometimes they have other preoccupations, and as you can see, in those times there are some other preoccupations, and we are here to make sure that they address systematically the ESG subjects. So we have dedicated meetings, and we help them to implement the indicators, to follow them, and we connect the managers also with specialists when needed. So for us, it's a general involvement, and we are sensitive to this because at meetings we have a baseline which is HRI, which means humanly responsible investor. It's our baseline. We created this baseline with the onset of the firm, and it's part of the DNA. And we really spend a lot of care to people. And we extend this principle to more other components of ESG, the environment part, of course, and governance. So that's the way we approach it, and we think that you can have quite a very good impact on companies. I can give you an example which is interesting. We are invested in a company named My Mobility, which is actually doing the transportation for disabled children every day. So about 10,000 disabled children going to school every day. So we do the transportation from the home to school. We have a very high service quality. So for us, it's part of the business. And we have this social impact, which we think is very important, and doing this business properly is very important. Otherwise, children, they don't go to school if you are not here with a driver at the right time. And there is another component, is we have a very big fleet of vehicles, about 3,500. And so we have the energetic transition to do. So what we have decided is to change the fleet, because the fleet is basically diesel vehicles, and to change the fleet within 12 months. So we have already decided to change half of the fleet has been changed 3 months ago, and the next half will be changed next year. And this is a decision so we took at the board, which is costly, but we think that's being very, very dedicated to companies and spending times enables to do this kind of decisions, and you can have some very precise measures. For instance, on a fleet of vehicles, how much do you emit? So we switch to electric and natural gas with very low emission rates. And this is a very high impact on this kind of business. And so I think what is important is really when you have your companies to make them progress is to focus on what has really a big impact and to measure it after.
Okay, thank you. I have another question, but I will come back on it later. But coming back on the pure, we are selling to LPs strategies and experience and track record, whatever. What do you see at investment strategies in this area? Maybe Gwenaëlle.
I think everything depends on your strategy. We come back to what we have been saying at the beginning. It's either you are impact fund with sustainability or ESG criteria at the center of your investment strategy. Mm-hmm. And in this case, the investment criteria are driven by sustainability. You cannot invest in a company if you cannot prove you will have an impact, and if you cannot prove you will be able to measure an impact. So everything in this case is centered on sustainability. Second strategy is the one that was referred to by François, is you are committed to commit with a number of rules as regards ESG. And everything in this case depends on what are the rules you have decided to commit with. And I think it's important in this case to be very clear on your objectives. Having said that, in terms of strategy for your LPs, if you are an impact fund, you have specific skills on ESG or on environment sustainability. In this case, you are able to leverage your skills, your expertise, and to offer your LPs different type of assets under management. You can raise funds on private equity, on ESG debt, on infrastructure, or even on listed companies. We have launched, for example, the first long-short hedge fund specialized on environmental trends. So you can leverage your skills and your expertise on a number of asset type. If you are a generalist fund, it's not the same way of thinking because you are not specialized. You are generalist. You just want your investment team to be committed to a number of rules. And we come back to the first thing that we were saying is that in this case, what are the rules? And I think what is important is the convictions. I think ESG is evolving very quickly. And today, ESG is not anymore gender diversity, for example. It's diversity as a whole. ESG is not anymore saying carbon footprint is reaching net zero, as I was saying before. And I think hopefully most private equity fund would be able to reach net zero in a few years, at least in 2030. So what is important is conviction, is internal conviction, and as I said before, everything depends on your strategy. Are you a specific vehicle investing in sustainability or in ESG, or are you a generalist fund committed to ESG, which is two different perspectives?
Okay, I think I got it. It goes beyond any strategies, what you basically say.
I think what I try to say, I've got the impression I'm very unclear. What I try to say is that either you're a specialist, you're a specialist in ESG, or you are a specialist in impact investing. You are a specialist in environment. In this case, first thing, you need to measure your impact.
Okay.
And second thing, if you're an impact investor or an ESG investor, you need to have internal skills able to deal with these specific issues. Or you are a generalist fund with different strategy, and you cannot. We will not ask any generalist fund to assess and measure all the impacts. But even if you are a generalist fund, you are able to have a strong impact through, in particular, all the ESG approach and strategy and ESG roadmap that are put in place across portfolio companies. But it's not the same approach, even in terms of investment criteria. If you're an impact fund, first thing in terms of origination, is to think, does this company fit or meet my investment criteria? Can I assess or can I measure an impact? It determines everything in your investment, in your criteria, in investment criteria.
That is very clear, and these two. Yes, I think I understand it very clearly now. Thank you. Speaking about, we all know that at the end of the day, we will be measured with our capacity to comply with those criteria and as well with those KPIs mentioned by Hassan, but as well on the returns we have committed to our LPs. So those ESG investment, how do they perform in terms of returns in the short term, but as well in the long term? I'm opening the question to all of you. I don't know if Laurence or François want to first respond to it.
It's interesting to see that we are all aligned on impact and measurement. I mean, the key issue for impact, which is measurement. Regarding the difference between ESG and impact, it's probably it needs probably to be discussed any further. Regarding the return for ESG, I'm really convinced that it can improve the return of the portfolio. Probably because when you analyze a portfolio or a company with an ESG angle, then you can highlight embedded options, the right to pollute, the right to do something wrong, and these options will have to be priced. And this option hasn't been priced or has been given for free, and now this option will not anymore be given for free. So I think all these embedded options are going to be, which were mispriced or even more not priced, are going to be priced. For impact, for me, it's really, I mean, the return is really a combination of impact of generated and the financial return generated. You cannot disconnect the measurement of impact and the measurement of the financial performance. So it's slightly different. I don't know if I'm clear or not. But
you are clear, thank you. What are your views, François?
It's a difficult question. I think in the short term, maybe it will be not obvious to have the same profitability on some specific subject, very much involved in impact or ESG topics, because all the ecosystems are not necessarily having the same view. We have the issues on some of our portfolio companies where we try to implement a lot of ESG, strong ESG principles, and the stakeholders of the company, around the company, are not necessarily making the value. So they don't value it for any reason. They have their own constraints. So because probably today it's the ESG philosophies and the impact philosophy is growing quickly, but not yet perfectly. And I think today there are some things, if you do very well your ESG, you might be penalized in the short term. In the medium and long term, I think the rules will change because Europe has launched a very ambitious regulation, which is very detailed and which has a very precise objectives. And I think the value will grow on the investments where the ESG impact will be very strong. We have seen it, to give you a comparison, a few years ago where there were the ethical and non-ethical funds. Today, to give you an example, we could not invest in a company producing a cigarette, for instance. 30 years ago, it would be maybe surprising to say it, but it would not make sense today. And I think it will happen the same with the ESG impact. In 10 years, the reference will be different, and I think it will be normal to have very high standards in ESG, and these investments will have much more value, and all the stakeholders will have integrated it. So we have to keep on doing this and increasing the knowledge that ESG and impact is really the good solution on the long term.
Okay, I got it. Thank you very much. So it's becoming mainstream, and the measurement of returns will not happen now without the measurement of impact and the compliance with ESG guidelines.
It might, on some cases. Maybe we cannot do everything and say, okay, we will invest in every business and have a strong ESG in every business right now, 100%. Maybe it will be more gradual within the next 4 or 5 years. This is the way it could happen.
Thank you, François. Any views on returns, Gwenaëlle?
A few months ago, I took part to a conference with students on the following theme. The theme was, is sustainability compatible with financial performance? I spent a lot of time trying to find resources, trying to prove that sustainability was driving profitability. I could not find any research proving that. I could find hundreds of research proving this and hundreds of research proving the contrary. So at the end, on a scientific basis, you will not manage to prove that sustainability drive value or sustainability decrease value. So you need to think in terms of cases by cases. At Omianda, we are convinced, because we are convinced that you can be a sustainable fund while provided very high return to your LPs. And it is what we work on every day. So we succeed to do it. Can we generalize it? I don't think so, because it's very difficult to have a general view on that. Having said that, to answer your question, is on the short term, I think any fund can be successful even without any ESG rules or any impact measurement. On the short term, if you have very good results, very good returns, you can be successful. On medium term, I'm more skeptical, because I think it's very difficult to live without clear ESG roadmap today. And it's a question of credibility. It's a question of employers' attractiveness. It's a question of consumers' attractiveness. So it's a question of image, of reputation. So I think on the short term, the answer is yes, you can be very successful with very strong performance without any ESG rules. But I'm not sure it's the case in the medium term.
And I guess it's a question as well on how are you capable to attract potential LPs and investors if you don't have those basic rules commitments as well.
Yeah, for sure.
Yeah, if I may add one thing, I think there is a link also to what you were saying before about the externalities that are not priced in, all of them, right? The negative impacts that and that are not priced in. And I cannot speak of returns, but as part of Visualis for 30 years, we have been, trying to convince investors that there is a benefit to it. And I think it's linked to, again, you might have a project, right, that emits a lot of carbon, but if it's not priced in, then, you are not, I think, in the formula, you are not taking everything into consideration.
Thank you. Thank you, Hassan. Laurence, you wanted to add something?
Yes, maybe to reconcile everyone. Yes. Hassan stressed something very important. It's the alignment of interest. So with financial returns, there was an alignment of interest between the management, the asset managers, and the shareholders. With ESG, we have shifted from shareholders to stakeholders, as you said, and with impact, we have had another actors, the beneficiaries of the impact. So, we enlarge the scope of the alignment of the actors, and that's a very interesting point. It's probably a bit early to draw a conclusion and to know how it works, but I think we will probably rediscuss that one day or another.
Thank you for this refreshing point of view, which is, I guess, probably the most important, and I think we can conclude on this. So thank you very much, Laurence. Thank you, Gwenaël, Hassan, and François. Thank you for participating to this event and to the audience as well. So I think we're going to make a break and a networking break, and then after this session, there will be a session on the panel 3, the first-time funds, roadmap to success. Let's meet in 15 minutes for the next session. Thank you very much.
Thanks.